Let's look at the detailed one because it's more detailed. We'll open it up, right click and open it. And let's see, let's close up the ham boogie. And so it's doing for all dates. So it's as of the end of 2025, noting that there's no date range here. Well, it's giving us all dates. If we're just looking at the ending balance, then it would be like a balance sheet type of report. Remembering the balance sheet type of reports where we stand as of a point in time, how much money they owe us as of a point in time. Whereas the income statement is a performance type of report. It needs a beginning and an end, similar to how far did we drive in a day? That means in a 24-hour time period, which means we need to reset the odometer. So now this subledger report can be thought of as a balance sheet type of report. How much do people owe us as of a point in time? And then it gives us the detail of the open invoices. It gives us the date of the open invoices, but it doesn't really matter what the date is. The invoice is going to show up here. If the invoice has not yet been paid off, that means it's open. So it gives us the information by who owes us the money, by customer, in other words. And the bottom line, if we were to sum it all up, is $5,281.52. So that should tie out to what's on the balance sheet in 2025, $5,281.52. So that's a classic subledger. The subledger should always tie into the general ledger account or the amount or the account on the financial statement, in this case, the balance sheet account. Now, you might ask, what if it doesn't? What if it doesn't tie out? Well, in QuickBooks, it almost has to. It's almost never going to not tie out. Why? Because QuickBooks is going to force you to add a customer every time you hit accounts receivable. This is why the accounts receivable account has its own account type, meaning when I create the accounts, I don't just put this under other current assets, which is what it would normally be called from a financial reporting standpoint, but rather it's in there as an accounts receivable type of account. Why? Because the system's going to treat it differently. It's going to say, hey, I'm going to generate a subledger based on this account. And not only that, I'm not going to allow you to post anything to accounts receivable if you don't add a customer. Why? Because then it'll throw off the subledger and the system's going to give you an internal control, not allowing you to throw off the subledger. Now that could be useful, although it does cause problems, as we will see when we do adjusting entries at the end of the period, when we would rather not post something to the subledger report because we don't want to mess up the internal activities of the bookkeeping system. We would rather just do an adjusting journal entry without hitting the subledgers. But we'll deal with that later. For the most part, it is a useful tool, right? It's useful that it doesn't mess up the subledger. So remember the two forms then, whenever you enter something to accounts receivable, it's going to go up with an invoice, and it's going to go down when you have a receive payment from a customer. It's going to reduce it. You could hit the accounts receivable account, for example, with a journal entry. But if you do that, it's going to be kind of ugly because that's not the form you typically use. That's what we're going to do, however, if we have to do an adjusting entry, which we'll see in a future course or section in the adjusting entry process. All right. Now, note that this report is not as useful in practice, however, because even though it like shows me that it ties out, but all the rest of the information I kind of already have functionally from a bookkeeping standpoint internally. So if I needed to add this to like a report to give to my supervisor or to add to a financial statement report, then great, I could use it. But from a normal day-to-day bookkeeping, I'm not going to go here. What am I going to do instead? I'm going to go internally, and I'm going to go to the sales tab, and I'm going to go where I was before. I'm going to track the accounts receivable here or by customer. So from an internal standpoint, that's not as useful a report. What might be more useful is the aging report. So let's go back to the reports over here and close up the ham boogie.